I was looking at the patterns on the S&P 500 like I am right now, and it reminded me something that I had written an article on. So I went to our web portal, not our web portal, just our tradingtrainer.com website, and I went to resources and articles. I've been contributing articles to this for, gosh, over 15 years. And I went back, I searched on an article that I wrote, gosh, back in 2010 or 11, called The Counting Method to Determine a Market Bottom. And so I pulled up this article that I wrote, and there's an actual method that we can use to determine, is it likely that we have found a market bottom? And I'd like to go through that if you've got a minute, Sip.
Well, yeah, and it, we're looking at that big spike, and the question would come up: does
Are we
this
seeing a
meet
bottom?
exactly? Yeah. So let's go into it.
So if you've got some sort of down move, then when you have an up bar like we had yesterday, that's day one of the counting method to determine a market bottom. And what you want to know about day one is whatever the daily low is, that becomes a level of support. And so day two and day three, the only thing that has to happen is that the bar has to stay above that level of support. If it doesn't stay above that level of support, then what that means is that the counting method is null and void. But if they do, it's day 4, 5, 6, even 7, but better if it's day 4 than day 7. You're looking for a 1% price move on heavy volume.